What's going on, everyone? It's Caddy with Money Vesting. I hope that you all are having an amazing day. In this video, we're going to talk about all the cruise line stocks such as Carnival Cruise, Royal Caribbean Cruise, and Norwegian. And we're going to dive into their revenue versus net income or loss. We're also going to look into 4 reasons why we've seen such a rally in these cruise line stocks. Then we're going to look at my TradingView platform to see what the pattern looks like. And we're going to compare these stocks against each other. And then I'll share my opinion on whether I think I'm going to invest or trade these stocks in the near future or not. As always, if you guys enjoyed this video, please make sure to give this video a thumbs up. It really helps out with the YouTube algorithm. And we're almost at 900 subscribers, so please make sure to hit that subscribe button and hit that notification bell so you don't miss out on any future videos related to the stock market, investing, and technical analysis. So going into some quick facts for the cruise line industry in general, anywhere between $49 to $52 billion in revenue worldwide is what the cruise line generates. Now going off of that, they create about 1.17 million jobs around the world. Now when it comes to cruise ships, there are over 300 operating worldwide with over 500,000 in total capacity. Now, in 2019, there were just about 30 million passengers that went on cruises, and I was reading another report that essentially said 87% of the passengers are going to be reorders. Essentially, if anyone's gone on a cruise, they're more likely to book another cruise again. So now moving forward, looking at the revenue comparison for these companies, we're going to dive into Carnival, Royal, and Norwegian. So this right here goes back as far as 2010, and you guys can see that these companies are not small. They're like really big companies generating anywhere between $2 billion to now $15 billion in revenue. Carnival being at the top with substantial amounts of revenue compared to Royal and Norwegian. Back in 2010, they were just over $14.4 billion. In 2011, they were just almost $15.8 billion compared to Royal, that was $7.5 billion. And Norwegian, which is the smallest of the bunch, close to $2.2 billion. And then just last year in 2019, Carnival generated over $20.8 billion in revenue, versus almost the $11 billion Royal Cruise generated, and then Norwegian was just shy of $6.5 billion. So now looking into their net income versus loss comparison, so this right here is a really good overview of how well they're doing in terms of generating a net income or net loss when compared to some of their other competitors. So Carnival, like I said, is going to be the biggest of the bunch and is generating substantial amounts of revenue. In 2010, they were close to $2 billion in net income versus $516 million that Royal generated and the $23 million that was for Norwegian's net income. Now, they have been consistently growing their revenue and their net income, and they have been doing an incredible job reporting higher and higher net income every single year. So in 2019, Carnival was just shy of $3 billion in net income. And then for Royal, it was just $1.8 billion versus Norwegian, that was just shy of $1 billion. Now, this right here is Q1 of 2020, and we all are aware of what's going on around the world. And that's essentially has been reflected in their net loss. So going into Q1 of 2020, Carnival reported the least amount of losses when compared to its competitors. So they reported a $781 million loss versus the $1.4 billion that Royal reported in net loss. And then Norwegian was even higher, $1.8 billion. So when we take a year-over-year change from 2019 to Q1 of 2020, Carnival Cruises has seen a 126% decline versus Royal saw a 176% year-over-year change from their 2019 net income to their Q1 2020 net loss. For Norwegian, the change was even higher because they were coming from $930 million net income last year to now over $1.8 billion in net loss. So these companies, fundamentally, they are profitable companies. They are companies that have been around for quite some time. There's a lot of market share, there's a lot of demand, and they are profitable. It's just that the timing was wrong for these companies with this global pandemic. But now moving forward and looking at some of those growth rates and again comparing it with each other, the average revenue growth since 2010 for Carnival has been 4.22%. For Norwegian is 14.25% and Royal is 5.62%. And the reason why there's such a high variance between Norwegian and the other two, because again, Norwegian is at a much smaller scale compared to Carnival and Royal, which are already generating substantial amounts of revenue and net income. So looking into their average net income margin, that essentially means how much of that revenue is going to trickle down to the bottom line as net income. Carnival is doing an incredible job generating 12.28%. That essentially means for every $1 in revenue that the company makes, 12 cents is going down to the bottom line as net income, when compared to Norwegian, which is just under 10 cents, and then Royal is just almost 11 cents. So this right here is going to be the schedule right now for the remainder of 2020. Carnival, Norwegian, and Royal, all the major cruise lines are expected to resume their sailings on August 1st. So we all know that CDC has essentially put a no sail order on all these cruise lines, but they're going to resume on August 1st. And again, there's a lot of forecasting and there's a lot of uncertainty in the markets and how this all plays out and if they're able to meet this timeline. But regardless, they're still taking bookings for the year 2021, which brings me to the 4 key reasons we've seen behind this rally and why all these cruise lines are essentially bouncing off of their lows and spiking close to 80, 100, 150% in returns in just a very short period of time. The first reason is, of course, the slower growth that we've seen in the number of cases. The curve has flattened and how much is growing marginally each day. When it comes to the reopening, there is a lot of optimism in the economy with the reopening and having the phase 1 in a lot of these states, which is why we've seen the airline stocks, the hotel stocks, and the cruise line stocks essentially going up in double-digit returns in a very short period of time. Now, when we look at the future sales, as I've already mentioned, a lot of these cruise lines have already started booking for the year 2021, and they're even on the rise. So they're much higher than expected. So that's, again, a positive note for these cruise lines. And by the year 2021, there's also hope of having a vaccine out, which is going to obviously help with everything that's going on and hopefully bring everything back to normal so that people can again start flying, start going on vacations, and start going on all these cruises. The fourth biggest reason behind this rally was the unemployment numbers that came out on the first Friday of June. That was last week. And the expectation was for an 8.3 million drop with a 19.5% unemployment rate. But instead, the report essentially showed an increase of 2.5 million with unemployment rate falling to 13.3%. So there was a pullback in the unemployment rate. And this, I've read multiple reports that say that there was a misclassification of error by the Department of Labor, and the real number for unemployment is somewhere around 16%, which is still better than the expected 19.5%, which is what's cost the entire market, not just the cruise lines, but if you look at the S&P 500, if you look at the NASDAQ, and if you look at Dow Jones, and essentially all the major indexes have been up quite a lot in a very short period of time. So I just wanted to share 4 reasons behind the rally we've seen in the markets and more specifically in the cruise lines industry. And now we're going to jump into my TradingView platform and I will share what the patterns look like for these stocks and where I personally see these patterns and stock prices going in the near future. All right, you guys, so here we are inside my TradingView platform, and this is the platform that I use to analyze all my stocks, all my patterns, create my different watch list, and create alerts. So if you want to get started, it's going to be the second link down in the description below. So right now we're looking at 2 stocks. This right here is going to be Carnival Cruise. You guys can see right here, ticker symbol CCL. And then this right here is going to be RCL, which is Royal Caribbean Cruises. So both of which have since May of 2020, in the middle of May, have gone up 135%. And then this right here, which is Carnival Cruise, has gone up 120%. So they're both very, very overextended. Looking at the RSI for both, for Royal, it's over 75, and for Carnival, it's just over 73, almost hitting 74. Looking at the MACD indicators, again, very, very overbought. Even though pre-market, they are expected to open even higher, close to 14% for Carnival, and then Royal is expected to open even higher at 8%. So, like I said, they are rebounding from their lows earlier this year. The low for Royal Caribbean was right around the 1896 level, right on the 90 level. If you guys see, this was kind of like the horizontal low that the stock was kind of forming. And for Carnival, that was the same case. The pattern is very similar to each other. Carnival Cruise, it was $7.75, hitting that horizontal low multiple times. And since then, it's essentially bounced off of that level. So from a technical standpoint, and this is what I said for the airlines industry as well, more specifically, airlines is a necessity. People still need to fly in the future. It's just a matter of when that happens, when the demand will come back. Cruise lines, the story is a little bit different because it's more of an entertainment as opposed to necessity. But even then, I don't think cruise lines are going to go anywhere in the future. I think the demand is going to eventually come back when we have a vaccine in place and when things go back to normal, whatever that new normal looks like. From a fundamental standpoint, I do see the value in these companies, because they have been increasing their revenue consistently and they have been reporting in net income up until Q1 of 2020, which was also because of everything that's going on. From a technical standpoint, I think they're very overbought in the last few weeks. And I personally don't want to chase something that's already gone up over 100% in value. If we were to highlight any type of resistance for Carnival, more specifically this right here, you guys can see that it's hit this price point kind of multiple times right around the $19 level. Once in March of 2020, then it pulled back and then pushed up to that level again in April of 2020, pulled back and then pushed up last week of May, and had a minor pullback before breaking out of that level last week. So if I'm looking for an entry point, I'm going to wait for Carnival Cruise to drop close to 26%. And if it retests this support, because so this right here has acted as a very good resistance for the stock in the past. So I'm going to personally wait for the RSI to pull back to the 50 level, which is a little bit more neutral, and the MACD to start curling back down. And if the pattern pulls back to its previous resistance, which can act as an ongoing support for the stock. So it's the same for Royal Caribbean as well. We've seen this price right here, the $50 level, act as a very good resistance for the stock once in March of 2020, and then again in April of this year, before breaking out of that level more recently. So I'm going to personally wait if the stock does retrace back to that level, giving us a 30% drop, and then this resistance acting as an ongoing support for the stock. And the MACD also pulling back and kind of curling back down, and the RSI also coming down to that neutral range, giving us a good opportunity to get into these companies and investing in these stocks and trading. Again, please do your own research and your own analysis when it comes to investing in the stock market. These are in no shape or form any type of investment or financial advice. Looking at the 200-day moving average for both of these stocks, we know that they have been on an aggressive sell-off and pushing downward. But more recently, they curled back up, consolidated, and are now starting to push up higher, and same with Carnival as well. It was on an aggressive sell-off before kind of consolidating and started going sideways, and is now showing signs of an uptrend. So that was my quick technical breakdown of these two stocks, Carnival Cruise and Royal Caribbean Cruises. I also wanted to go over some of their fundamentals and what the revenue and the net income or loss looks like, and the 4 reasons behind this huge rally that we've seen more recently. I hope you guys enjoyed this video, and if you did, please make sure to give this video a thumbs up. Subscribe to the channel if you haven't already. I really do appreciate you guys' support. As always, happy investing, and I will see you guys in the next video.